Hello, and welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 20 years in the Nigerian markets. So, in the course of this video, I would like to analyze the company right there. That's Caverton Offshore Group. It's a an aviation logistic company for the oil industry, for the oil sector. So we want to see precisely the suitability of this company for your portfolio or otherwise. And we want to carry out a thorough analysis of the company and give a recommendation at the end of the day. Please don't forget to subscribe to this channel, like this video, and also share it to people in your circle. Let's look at the the table here. We want to start our analysis by considering the revenue of the company, and the company actually made a revenue of 25.756 billion, 25.756 billion in the full year 2025. That was last year, as against 40.181 billion naira in the year 2024. So you discovered that right from the very beginning, there's a problem here. It's a drop in revenue from 40 billion to about 26 billion approximately. And that's representing a difference of about 15 billion naira. There's a drop of about 15 billion naira, a decline in revenue for 15 billion naira. That's a red flag already, far as this company is concerned. Now, we want to go down to the operating profits of the company. For the operating profit, the company generated 15.532 billion naira, which is somewhat encouraging, as against 8.422 billion. 15.532 billion as against 8.422 billion naira in revenue. That is also okay. Now we want to consider the profit before tax of the company, Caverton. So this is where the problem started. The company recorded a loss of 11.773 billion, 11.773 billion naira, as against a loss of 53.506 billion, 53.506 billion. Well, you may say, well, there's the loss obtained here is somewhat lesser. This is lesser than this. That might serve as a kind of improvement, but all the same, the company is still sustaining losses. It went down from about 54 billion to about 12 billion naira. 54 to 12 is somewhat, is somewhat encouraging, but all the same, it is still a loss. The company is still in a quagmire, so to say. So the value for total income, total comprehensive income here is 11.837 billion as against 53.859 billion as against 53.859 billion naira. So these are all losses all through. Losses, year 2024, and equally, a loss position in the year 2025. Now we come to the earnings per share, which could be considered the most important figure in the overall, in the total, in the entire table here. The value given here is 3 naira 51 kobo. That's minus, all right, a minus negative per share of 3 naira 51 kobo, as against a minus negative per share of 15 naira 96 kobo. 15 naira 96 kobo. All right. So we will still come to this later, but all the same, the company is still in the red. The company is still battling with you know a downward spiral in its figures, in its operation. We we are through with the profit and loss segments of our analysis. We now want to go to a skeletal, summarized version of the balance sheet as well as the cash flow statement. So let's start with the cash flow statement here. The company has a cash of 690.5 million naira. 690.5 million naira, slightly above half a billion naira. But unfortunately, all right, this is a figure I wouldn't want to encounter in any analysis. This is scary. The company has a negative equity of 9.69 billion. All right, that means that the shareholders have no equity in the company. There's no equity remaining at all because of this value. All right, it's better to encounter a negative cash flow than to come across a negative equity. The company is really struggling. The balance sheet is weak. The balance sheet is really, is extremely weak in the sense that there's nothing to show for. The company cannot boast of anything when it comes to equity. All right. Now, we look at the company share price here is 6 naira 70 kobo, and the share outstanding is 3.35 billion share outstanding, and the market capitalization is 22.45 billion. That is 6 naira 70 kobo times 3.35 billion naira. We give you this figure 22.45 billion. Okay, and so what are we really deriving from this? You discover that because of this negative equity, the equity per share is nil. It's zero. It's not, doesn't really exist. Doesn't exist at all. Now we come to the PE ratio. The PE ratio here essentially is the price all over the earnings per share, the ratio of the price all over the earnings per share. So in this case, the price is 6.7 naira, 6 naira 70 kobo. By the time you divide this value by a negative earning per share of um of 3 naira 51 kobo, you will still arrive at a negative PE ratio. It's nil. It's nil. So in this case, if you want to invest in this company, what is the basis for your investment? How will you value the company in the absence of a valid PE ratio? There's nothing to really guide you. But PE ratio is zero, the equity per share is zero, and the equity itself is minus, is minus 9.69 billion naira. The company is in deep trouble. All right, the company seems to be passing through, somewhat some kind of a distressing situation. It's in distress actually, and so for this reason, I would like to recommend a sell. If you have this company in your portfolio, please you sell it. If you are planning to buy, you hold. Don't buy. But if you still like the company, you are in love with the company, just give it time. When it comes to operations in the market, companies do recover. It's a matter of time because no condition seems to be permanent. So whenever the company recovers, you could buy, because I could sense a little signal or a little semblance of recovery here, in the sense that you see the losses has reduced from 54 billion approximately to 12 billion approximately. That's 54 down to 12 approximately. And the losses here, is kind of reduced from 15 naira 96 kobo to 3 naira 91 kobo. So just be patient. You can still wait until when the company is out of the woods, you could go ahead and invest in the company. But for now, this is the recommendation. Although the entire exercise is academic in nature and for entertainment purpose, but this recommendation still stands. All right, so that's it for this company. It's not something I will encourage you buy. It's something you should be selling. You deploy your capital elsewhere. There are many other companies in the market that are doing very well. So why would you leave your capital, your fund in in a poor performing company? Just wait until it recovers. You can go ahead and buy. Okay, so I want to thank you very much for your patience. Thank you for watching. Please, I will advise and encourage you also consider other videos in my channel as well. Thank you very much for watching.